Welcome back to Lokad TV Live. Joining me in studio today, Lokad founder Johannes van Morel. And today we're discussing a very interesting topic, forecast accuracy, its role in demand planning, and whether or not it even matters. Feel free to submit your questions at any time during this chat, and we will get to them in the second half of the conversation. And if you disagree with anything you hear, we'll answer those questions first. So let's get started. Johannes, we are, I think it's safe to say, somewhat of a contrarian company. This might be the most contrarian take we have. So before we get into our position and why we think demand forecasting accuracy is unimportant, why is forecast accuracy viewed by so many companies as the holy grail of demand planning?
The why is, I believe, relatively straightforward. It is what is written in supply chain textbooks. It is what has been written for the last maybe 50, 70 years, maybe written in supply chain textbooks. Before it was not called supply chain, it was called operation research. But this is it. And I suspect that we could even go further than that, even back to the 20s, and we would find the sort of premise of that with the emergence of the economic forecasters, the professional economic forecasters. So that was, and the interesting thing was, if you take this idea of accuracy, forecasting accuracy, back to its root, which are the economic forecasters in the USA at the beginning of the 20th century, then accuracy has a one-to-one translation to your profit if you play the stock exchange game. So literally, if your accuracy you care about is forecasting the price of commodities, will the price of pig iron, raise or not, then if you have an accurate forecast, and you can potentially beat the market and do fantastic returns. Now, this is true for essentially speculation. Now, the problem is that, do you have a forecasting model that can beat the market? The short answer is no, because at least not an easily accessible model. So you cannot really beat the market anymore in this time. There are some caveats to that. Some arbitrage companies are making money on doing that, but that's just one point. And supply chain-wise, my point is that there is no direct translation, but my criticism is not exactly aligned to that. The problems are deeper and more fundamental, because that's not this game that is being played at all. This is not about just getting a number, and if you have the number right, it will automatically translate into you making money, just like it is when you're playing essentially the stock exchange.
So again, and I'm going to do my best to push back as a proxy for anyone watching who's shouting at the screen already. Are you saying that there's no correlation between increased forecast accuracy and bottom line profitability?
So the problem here is that there is a deception going on with the terms themselves. And so I will maybe start by clarifying a little bit how do we define accuracy? And there are, I believe, at least two ways. One mainstream way of defining accuracy, and one that would be the Lokad way of defining accuracy. So let me start with the Lokad way, which is not mainstream, on how do you approach accuracy. The whole idea of accuracy is I am making a quantitative statement about the future, one way or another. The way you're making, so you make a quantitative statement about the future. And what is the accuracy about? The accuracy is a qualification in terms of quality, how good it is, how faithful it is of this statement. So you have a statement about the future. The future should look like this, and this is not a qualitative statement, but a quantitative statement. And then, on top of this quantitative statement about the future, you want to qualify to say how good it is, how faithful it is, how does it really depict the future. And you want this assessment to be quantitative in itself. And that's what the accuracy should be. So the accuracy should be the general way you quantitatively assess a quantitative statement about the future. So if we define accuracy the way I do it, I would say fine. I agree, this is very relevant. This this definition leads to something that is meaningful and significant and potentially profitable for your company. Now, this is absolutely not what the definition that you will find in supply chain textbooks. Not even close, not even remotely close. The mainstream definition of accuracy is I have a time series forecast.
Okay.
So first, bottom line is when people say accuracy, they are implicitly speaking of time series forecast. And not any kind of time series forecast that's going to be a point equispaced time series forecast. So what does it mean? Equispaced mean it's a periodic forecast per day, per week, per month, per quarter, potentially per year, potentially per hour.
Equal intervals.
But equal intervals. So that's a periodic forecast. So it's not any kind of forecast. You can imagine many other alternative forecasts. It's a time series, one-dimensional and periodic. All periods are the same. On top of that, we are talking of a point forecast where each period gets one value. That's the time series forecast. So then the accuracy is a metric that you put on top of that. There are, I would say, a whole bestiary of metrics, but they have all in common that they work on time series point forecast, equispaced time series. So that's going to be the mean absolute error, the absolute error, the square error, the MAP, mean absolute percentage error, etc., etc., etc. There is like a bestiary of 20 of them. Some are rarer than others. And this is what is understood in mainstream supply chain textbooks when they say accuracy. So you see, my definition is very, very different. You know, my definition, the one I gave, was I would say much more broader and non-specific about what sort of quantitative statement I'm making about the future. I'm saying that my definition is completely agnostic. It just says we are trying to qualify a statement about the future, and I'm just saying that this statement should be quantitative. So I'm not challenging something like I believe will be, you know, a good year. That's not a quantitative statement about the future. That's just something that is qualitative. So I'm just saying that accuracy applies to quantitative statement about the future, and that we want to assess it again with a quantitative instrument, and this is it. Again, so that's the Lokad approach to accuracy. But if we contrast that with the mainstream approach is much more direct, and it makes a very, very significant assumption.
Okay, what are the assumptions?
And the assumptions are time series, one-dimensional, periodic, or equispaced, and point forecast. So that's pretty much, you know, the core assumptions. There are some more fundamental assumptions that people might not even see it. We might review them afterward. It's symmetry between the past and the future, locality of measurements. That would be another aspect, and that would be agnosticism to the computational or software environment. So that would be another class of concern that are also absent from the classical perspective on accuracy.
Thank you. And again, to push back a little bit, when you've described the difference between Lokad and the mainstream approach, but I imagine some people might not be clear, what is the problem with the time series perspective? Again, you say it's one-dimensional. Okay, in what respect and why is that an issue?
When you decide that you want to describe the future with quantitative, you know, statements, we are so used, and in the textbooks, it's literally supply chain textbooks, but other business textbooks also don't even acknowledge that there might be another way to look at the future than time series. And that, I think the biggest mistake is that it gives the impression as if the only way to look at the future quantitatively was time series. And I say, certainly not. And more than that, time series are an incredibly simplistic model. It's like one measurement with one tick over time at every period. Tick, 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 one value per period. It's the simplest of the mathematical model that we have. On the plus side, it is indeed very, very simple, and it is very easy to draw. But is it a faithful, to draw, I mean, on paper, on a screen, etc. But is it a faithful representation of the future? Does it reflect in a sensible way something that you know about the future? And my proposition is that for supply chain purposes, no, and not even close. And if let's start with some examples. Let's have a look at, for example, the demand that a supermarket will observe. The time series perspective says you can take any product that is being sold in the supermarket and have, time series, one per product sold by the supermarket. Is it the correct way to think about the future demand? No. Why? Because people do not walk into a supermarket to buy one product in isolation. What they want is a basket, or at least the vast majority. Occasionally, you might have some people that walk into the supermarket to buy one product. But the vast majority of the sales are driven by people who go to the supermarket or hypermarket like once a week, and they buy an entire basket of products. So what matters in terms of demand, the demand is expressed at the basket level. This is what people will observe, what they will feel, and if they think that there is, and if we have to think in terms of quality of service, it will be perceived in terms of basket. So it's do I have all the things that were needed, that I needed for my shopping list? So, and this perception, which is at the basket level, has nothing to do with those time series in isolation. And those time series in isolation, they just completely ignore all the relationship that there is between the products and all the substitute and cannibalization that may happen. You see, so it's entirely blind to those effects. So we have a problem of blindness, is that this one dimension, that is at the core of the time series, it ignores the higher dimension that can be extremely important. And my proposition is that it's not an accident. I took the example of a supermarket, but pick any company and do the effort to actually think about what the future actually means. What are we actually looking at? And you will realize that at the core, we are not looking at time series. We are looking at things that have structure, but not necessarily, and usually not time series structure. I mean, there might be some incredibly simplistic businesses, pop and mom shops, that where the time series is like sufficient. But those businesses are the exception. They are not the norm, especially in the world we live today with large companies operating large supply chains with a lot of ambient complexity.
So again, to underline a few points, each time series would treat any given item or any given SKU independent of every other given SKU in a catalog, and thus if there are interrelations, if there are bundles or substitutions, it will be agnostic or blind to that, and that ultimately makes the accuracy for any individual item not wrong but misleading. Is that where you're going with this?
Literally, I mean, if I want to do an analogy, is you have imagine you have a television and it's black and white. That will be your time series forecast. You're lacking something, and you can add pixels, and that would be adding accuracy. So you have more pixels, but you still have only black and white. And if you think, oh, but if I add a lot of pixels, yes, but you're still black and white. And it doesn't matter how you can make the television bigger. You can make it with more pixels. You can increase the refresh rate. You still do not have colors. You only have black and white. And that's the thing, is that you have like a missing dimension. So I'm taking this an example where it doesn't matter what you do. If you're missing dimensions, you cannot salvage the case. And there are so many dimensions that are missing. If we want to take another example of a dimension that is missing, let's revisit this supermarket example with perishable food. Perishable food would say you have products on the shelves, but every unit that you have on the shelf comes with its own shelf life. And what many shoppers do when they visit the store is that they look at the expiration date, and their opinion about the product differs depending on whether there is like only 1 day left of life for this product, so it expires tomorrow, or whether there is like 3 weeks, it's still very, very fresh, and there are 3 weeks left of lifetime into this product. And their willingness to pay and their opinion of the store also will depend on this quality. But if we look at the data from a time series perspective, this is absent. You cannot, through a time series representation of your sales or demand for, let's say, a pack of yogurts, represent the freshness. It's absent. You could try to cheat a little bit, like saying, oh, but we are going to represent, I have 1 pack of yogurts, I'm going to use 5 different time series that would represent the demand for the various freshness level and whatnot. That would be, if I go back to my television equivalent, to say, well, I only have black and white, but do you know what? I can just buy 3 televisions, and I would say the first one is going to display the blue, the second one is going to display the green, and the third one is going to display the red. And technically, I have all the colors. I just need to somehow visually recombine that. I would say, yeah, but that's a very, very crappy, convoluted solution to the problem. It's not a good solution. It is technically, in a mathematical sense, yes, you have access to the information if you organize your TV set like that, but from a practical user experience, it's complete crap. And that would be the same if we were to do for the supermarket, to say we are going to just deal with perishability by just adding more time series. Yes, in a very technical sense, you could potentially do that, but it's just going to be, you know, a very impractical solution. It's not going to be a good solution. And you see here, again, perishability, the problem is that the demand, it's not a one-dimensional thing. You have another dimension, which is freshness, and it matters, and it impacts the demand, and it also impacts your stock. If you think that you have 50 units in stock, but half of them expire tomorrow, then you do not have truly 50 units in stock, because even if you only sell today 5 units, the next 20 will be gone no matter what tomorrow. So you will be left with 25 Monday morning. And that's, you see, that's only if the client doesn't have an adversarial behavior of picking the units that have the longest shelf life. You know, the clients who picks products on the shelf life, on the shelf in a supermarket, might even pick the products that have the longest shelf life, and thus they might actually adversely select the products that are the least where you have the least emergency to sell them. So back to the initial case, you see, the time series cannot, and we have just mentioned one example, supermarket, and we already have 2 examples of super important patterns like baskets and perishable items. They are very important, they are very core, and they do not fit the time series paradigm. And then the accuracy, the textbook accuracy, only reflect time series paradigm. You know, it only match implicitly, and that's why I say Lokad diverge, is that the supply chain textbook, when it comes to accuracy, it's only about time series. And my point is that, yes, you have an instrument that measures something that is inconsequential. And it doesn't, and thus, because it is inconsequential, because it doesn't match the core DNA of the business, what makes the business ticks, you know, those baskets, the perishable things.
It sounds like you're talking about basically constraints. There are a lot of constraints, a lot of
not
other
even,
intangibles.
Not even constraints, structure, the basic structure of the problem. Meaning, in a supermarket, it is not about selling units, products, one at a time. It is about selling baskets. This is what makes the supermarket tick. This is the essence of the supermarket. The supermarket has literally been engineered from the floor to ceiling to sell baskets. That's why you have those point of sales where you can unload your whole stuff and have the whole things that move forward. And that's why you have a chariot. That's why, I mean, everything has been engineered in the supermarket so that people can buy a lot of things at once. If you just want to buy, an extra cup of coffee, it doesn't make any sense to go to supermarket. So my point is that because everything has been engineered in, including the parking lot in front of the supermarket and whatnot, has been engineered so that you can buy an entire basket. Does it make sense that your predictive tool look at the case, one product at a time, everything in isolation? And my answer is no, it doesn't make sense.
So there's no way to adapt, again, I want to stay on the time series perspective, there's no way to adapt the time series perspective to reflect the unknowns or the intangibles that you're describing?
So a mathematician would say if you pile enough time series, you can, because you see, we could always say we can add more time series. And yes, that's exactly like saying we have a television that is black and white. You can have like multiple television sets, and then you will have one for every color. And then technically you have the colors. I say, so you see that we need to be careful here is that if you say that through time series you're allowed to just introduce more and more time series, then yes, technically you can deal with any number of dimensions because you increase the dimensionality of your instrument by just adding time series. But it is not a practical solution. Just like if you want to have colors on your television, having multiple television sets is not a good solution. You see, that the thing is that, yes, it is technically possible, but you know, in mathematics, there is plenty of solutions that are widely impractical. You know, mathematicians are very good at inventing crazy solutions that are technically correct, but they are only, you know, mathematically correct. In the real world, it is insane. It's not the way you would approach the problem. It's not going to give you a good solution. It's going to give you a very theoretical solution.
Okay, but critics might then say there are plenty of tools that are predicated upon the time series approach that actually in practice work. Take, for example, forecast value added. Now, what you've just described, I presume, doesn't fit onto that, but people who advocate that would say, actually it works, contrary to everything you've just said.
So, yeah, people have been claiming that their tools just work since essentially the late 70s. So since basically the late 70s, that was 45 years ago or so, vendors says we have advanced automated software that can literally automate everything that is supply chain related. And when people say we have, let's say, enterprise software to do management, nowadays, when people say I have a CRM, customer relationship management, it's just about the clerical records, data entries. But if you go back in the 70s, when they were saying management, they were thinking decisions as well, all the intelligence. And so my proposition is say, in theory, we have, since the last 4 decades, software that are supposed to robotize entirely all those decisions. Inventory replenishment, production scheduling, inventory allocation, price optimization, all of that is, according to vendors, fully automated, 100% automated, since 4 decades and a half. And most vendors, if you look at the way they communicated through the 80s, they were saying, this will be done by the machine entirely. Just like you do not compute anymore manually any multiplication. If you want to apply a tax rate, nobody expects that you will do the multiplication to add, let's say, the VAT manually. You will have a machine to do the multiplication for you. Before that, it was a person, a clerk, who would do that. Now, it is the case. Absolutely not. And during the last decade, I met probably something like over 200 supply chain directors. And invariably, there has been like a whole series of software that have been put in place. And everything is done through spreadsheets. And so my take is that you have a software, you have like literally, we are like 4, 5, 6 generation of enterprise software geared around time series forecast that supposedly robotize everything, supposedly. And supposedly they have been doing that for decades, like 4 decades. But the reality is that it's done in Excel. What went wrong? I believe that at the core, we have many problems, but at the core, the time series perspective is wrong. And this is just a mismatch on the future. And this is a mismatch because it doesn't fit the structure of the problem. I mean, there are other problems, but that is probably the biggest, is that it just do not fit. This one-dimensional take on the future is just simplistic, and thus everything falls apart starting from that. But that's not even the sole problem.
Well, then, if people are not supposed to pursue, well, let's just use jargon. Forecast accuracy is a KPI, essentially, or in many contexts, it is a KPI. If you're advocating not pursuing forecast accuracy as a KPI, well, then what do we pursue instead of that? What is the supplementary or the substitution KPI?
First, I would say we need to rethink about what is it that we are trying to solve. We are trying to produce quantitative statement about the future that makes sense for the company. So that's what we are trying to do. And then we just need an instrument on top of that to assess that whatever quantitative statement we make about the future is beneficial for the company. Very good. Now, what I'm just saying is that a statement about the future is largely domain specific. And that's exactly the contrary of what is stated in supply chain textbooks, where supply chain textbooks essentially claims that time series is all you need. That is the implicit statement that is made in those supply chain textbooks. And my take is that and that's my conclusion after observing, again, hundreds of companies, is that it is almost invariably wrong. If there are businesses that can be adequately modeled through time series, they are the exception. They are not the norm. They are the exceptions. And pick any business, and you will see that when you look at the fine print, that the structure is not aligned with a time series. That's as simple as that. And you see, that's the thing, is that if you try to project a mathematical model and it doesn't have the right structure, you're not going to properly model the realities that you're trying to model. It's just going to mismatch, and you will have the problem of trying to fit a round shape in a square hole. It just do not fit, and this is a very basic problem. But if in your entire life you think that the only shape that exists is a round shape, if you've never seen anything but a round shape, you may be inclined to think that it only exists round holes. But that's just because you have only seen a round shape in your entire life, and that would be the equivalent of time series. If you've all the quantitative statement that you've seen about the future are only time series, then you might think that it's the only thing that can be made. It is not. There are plenty of other ways to do it. But you see, my point is those other ways, they depend on the business. If you're a supermarket, your DNA is those baskets. This is what makes sense. If you're fashion, that's going to be completely different. That's going to be novelty. And people have wants. You want to trigger wants. And that's something that is very diffuse with cannibalization that are all over the place. So you're playing with this novelty and this generation of wants. So the structure of your problem is completely different. And again, time series don't really make sense. If you're a fashion company, you want to generate those wants, and they are like diffuse areas. And yes, and for a diffuse area, let's say you have like a new pattern that becomes like super trendy. Let's say you have this color and this pattern that becomes trendy, then it can diffuse, and then you can generate many products that play with that. But you can have more or less products. You can have like an indefinite number of variants. You can always increase a little bit your size range. Going further and further to the extreme sizes. You have diminishing returns because you don't have enough clients to support those extreme sizes. The bulk of your clients are in the middle. Same thing with colors. If you go for very extreme colors, you might not have enough demand to support, having so many variants. And you always have like an infinite numbers in fashion to do minute variation to any products that you produce. If you produce a minute variation of a product an extra variant of something that you're already selling, you may capture a little bit more demand by having this extra variant, but then it comes at a cost. And so if you want to think about the future, you need to think about those halo of wants, of willingness to buy, and it's not something that is, that match your time series vision. And if you go into other businesses, let's say you're selling merchandising for, let's say, action figures for movies and Supermans and whatnot. Lokad has one client in this area. then it's something that is even stranger, where it's literally a business that is selling merchandising goodies associated to, superheroes and whatnot. And the interesting thing is that the entire business has at its core the structure of those heroes, those fictitious characters, and they don't have the same market power. Batman is a lot more powerful in terms of merchandising, in terms of business, than, let's say, Green Lantern. And that has been a constant for the last couple of decades. So whatever you do in terms of producing more action figures, T-shirts, all sort of merchandising that you could think of attached to those brands, they will not have the same power, and everything is driven by those action figures. So again, the structure of the problem is very dependent of the business you're looking at. And if we go into aerospace, that would be yet another thing. Because let's say in aerospace, if you want to support an aviation company, well, all the consumption of parts is driven by the fact that you have a fleet of aircraft, and every aircraft has a life cycle that It is very well established. It basically lasts something like 3-4 decades. It has like a start year and it will end. And the consumption of parts will follow some certain curve in this lifetime. And so the proper structure, if you want to support a very large MRO that supports fleets of aircraft, is to think about what are the fleets of aircraft that I'm supporting, how are they ramping up and ramping down. And that's the structure of your problem. You want to support those fleets that wax and wane over the decades, and that will give you the structure of your problems. And everything is ramified from those aircraft. So that gives you an example, but we can pick, again, we can multiply the examples with as many verticals, but the reality is that whenever you pick a vertical, pick one at random. If the audience wants to pick a vertical, I would oblige. The reality is that whenever you apply a time series, it's like a very, very crude, not even approximation, it's just a simplistic modelization, and you say this is it, and this is not. This is not even close to the actual faithful representation of the structure of the problem. You see, that's my point, is it a faithful representation of the structure? And if I go back to some sort of exercise that a teacher in physics was doing, he said, 20 years ago, when we were doing an exercise, we'd say, okay, this is a cow, and we're going to approximate the cow as a sphere. And it's good to do, a toy exercise, but the cow is not a sphere in reality, and not even close to a sphere. So this is a very, wacky approximation. It's good to do an exercise, but it's not good to do anything real. If you have to deal with real cows, I would not give any advice of approximating your cows as a spheres. It will not end well. This is not a valid approximation.
Well, to push back yet again, when you say that a time series is a very simplistic approximation of future, we routinely, Lokad describes our approach, which is probabilistic. We don't need to get into the weeds on that, but we sell our approach as better to be approximately right than exactly wrong. Is this just a difference of terms, or?
So, as I said, first we have the structure. And by the way, that's also one thing where Lokad diverge. We are using, the probabilistic approach as a rally flag, but the reality is that my beef is first probably about the structure. The second problem that I see is another one. It's the classical textbook approach on supply chain, for the accuracy, just assume that the past is the exact symmetric of the future, or rather that the future is the symmetric of the past. And this is not the case. This is not the case. This is true, in a sense, if you're looking at, let's say, the movement of planets. So things where you're just an observer. The humanity observe, it cannot change anything. So if you want to forecast the movement of planets, let's say planet Mars, then yes, assuming that the past is just the symmetric of the future, it's just fine. Because we can send a probe, but this is it. It's not going to have like any tangible, measurable impact on the movement of the planet Mars. So in this case, it's good. But for supply chain, it is not good. Because all your future is conditional to decisions that have not been made yet. You see, that the thing is that your future is conditional to your future decision. And not only your future decision, but also future decisions that will be made by other people like you, like your competitors. So there is this radical asymmetry between the past and the future. And the classical time series perspective, which is emphasized, characterized with its accuracy, is just entirely dismissed out of the, it is entirely dismissive of that. It's not even mentioned. It does not even exist. And it is not even assessed in this sort of accuracy metrics. When we say accuracy, again, I'm referring to the mainstream vision about accuracy. All the sort of metrics that are captured under this umbrella, they do not even they acknowledge the existence of this asymmetry between the past and the future, where the future is still open, where you can shape the future. It's just absent. And in my proposition, it is a big concern. If you want to make a faithful statement about the future, whatever this statement is, it has to embed, in itself, the fact that the future is still up to decisions. You see, you want to make a statement that is still useful despite the fact that decisions have not yet been made.
So you don't essentially, because again, I want to plant a flag here because this is a key part of understanding what it is that we do. A lot of people sort of in a Samuel Beckett sense, they think they stand astride either side of demand and that they just observe it, as you said, like observers. But you're saying that okay, we don't control the future, but we can co-author it with the choices that are made. And what are those, though, for people who are not aware?
Yeah, I mean, let's say you're selling backpacks, sporting goods backpacks. Well, how much are you going to sell? I give you a backpack, let's say 6 liter, 2 pockets. How many units are you going to sell? Well, it depends. It depends first on how many variants are you going to introduce. If you only have like one black backpack and you put it everywhere on your e-commerce and all your stores, then maybe you're going to sell a lot. But then if I say you have 6 liters, 2 pockets, but you're going to do 8 liters and 10 liters variants. So you have more variants. So now you have like other backpacks that are kind of similar, a little bit bigger. And then you do a 12 liter, but with 3 pockets and 4 pockets. Okay, so you have even more variants. So we see that we can do variants in terms of number of liters for the backpack, number of pockets. And now I've said the only variants are only, they're all the color black. But now I say that I'm going to introduce half a dozen of colors. Every single time I introduce one more variance, am I going to double my sales? No. Obviously, there will be cannibalization. So maybe the first couple of variants will steadily increase my sales just because I will capture more demand because I have more variants. It will suit more people. But as I introduce more and more variants, obviously, at some point, I will hit some sort of plateau. I will have captured and I will have diminishing returns on every single variant that I have. And here you see that the demand that you have for the future is not written, it's not carved in stone. It very much depends on how many variants do you introduce. That's a choice that have yet to be made. And if you split the problem and say, no, I just want to decide the assortment first, and then forecast second, I would say this is nonsensical. Because obviously, if you decide first your assortment and then you forecast, if you do realize that some products have not enough demand, you're going to remove them. I mean, you're not, it doesn't, just pause for a second. If you decide that you're going to have like 20 variants in total, you do the forecast, and then you realize that one of your variants is going to sell 10 units a year. That's not sufficient. That's insane. You don't want to produce a backpack that is going to sell 10 units a year. You need thousands of units a year. So obviously, you're going to eliminate this variant from your assortment. But you see, here we are modifying the assortment, and thus we are going to modify the forecast, because then we are going to, those units of demand, maybe they are not lost. Maybe they will remerge with the rest. And as we remove more and more variants, we are going to consolidate with some losses the demand onto the variance that remains. But you see, so literally, we are engineering the demand, and that's what companies do. You know, that's also the law of Jean-Baptiste Say, the economist. Supply precedes the demand. You have to push the stuff to the market to create the demand. Before Apple introduced the iPhone, the demand for iPhone in the market was exactly zero. You have to push the product first to the market, and then you will generate demand for the product. That was a surprising finding in the 19th century, but that was finding is that supply precedes demand. And thus, when we think about accuracy, is that beware, are you treating your demand like the movement of planets, where you treat your own company as a complete observer of the demand that your company generates? By the way, I'm getting back, your company generates its own demand. The demand do not fall from the sky.
But operating within the paradigm that you're criticizing, there are practices like forecast value added where you have demand, and I go to marketing and I go to sales and I elicit their insights. Oh, we're going to introduce X amount of variance, and then there's an awareness that our decisions will author the future, and revisions are made downward or upward.
Yeah, but I would say, again, after observing companies for now over a decade, almost a decade and a half, those are just bureaucracies. You know, that the thing is that when you look at how things truly happen, you have some people that in the company somewhere say, oh, we have an opportunity, we are going to do it. And then they think that if they just do it like that, it sounds like unscientific. So they want to back up what they are doing, their gut feeling, with numbers. And so some people will throw numbers on top of it. And then it would say, okay, we have numbers. Now it's scientific, we do it. But no, it was a very valid gut feeling about the market. It was a very valid high-level reasoning about something. And then they had the back of the envelope calculation to kind of size the initiative right. And then all the rest was just bureaucracy to kind of stamp the whole initiative. But it did not contribute to the thing. It was not the initial spark. It was not the impulse. It was not even the true scientific, the true science, the true mastery of anything that made it possible. It was just, paperwork that happened afterward, after the battle. And it gives in the company some reassurance, and it just blends into the ambient bureaucracy. But just don't confuse, the root cause, which is, the spark, the insight, the gut feeling, with the ambient bureaucracies that just overexpand and is used by various parties just to I would say, play political games in the company. That's what it is.
But again, what's the difference between what you just described and what Lokad does with its own clients, where we communicate, they give us insights into what the future plans are, we bake that into the numerical recipe, and what's the functional difference?
The functional difference is that fundamentally we have numerical recipes that are much more versatile. We are not stuck with time series, and we very rarely have time series model in practice. It's always like bastards model that are, on the surface, just because if you want to display a curve on the screen, it has to be a time series. So visually, it looks like it is a time series. Why do we need a time series? Just because screens are two-dimensional and we have one dimension that is time. So if you want to plot something on the screen, it has to be a time series just because the computer screens are two-dimensional and our perception is two-dimensional. But under the hood, the model is not one-dimensional. That the gist is that most of our predictive models do not operate like time series forecasting model. So we do have accuracy metric, except when we do, they are aligned with the vision that outline, something that qualify the faithfulness of your quantitative statement about the future. But it is something that has very little to do with those mean absolute percentage error metrics. It's not even, we don't even operate with the same paradigm. So we ask ourselves the question is that, are we making a statement that is truly significant, that is faithful, that is aligned with what I'm truly trying to do? Such as, does it align with this sort of dynamics of hit or miss that I have in fashion. You know, that's the thing with this willingness that you want to generate, this novelty-driven sort of dynamics. You have hits or miss. Do I have predictive statements, statements about the future that embrace that or not? If I am in the aviation, do I have something that truly, embrace this idea that I'm serving a fleet and that the fleet has some parameters that I can control? They are not predictable. They are known because it's literally the physics of it. So an aircraft is, when it says you have like a lifetime of 4 decades, maybe it's going to be 3, maybe it's going to be 5, but it's very well constrained. So you have like a very clear vision. So you don't necessarily need to forecast that much. You can literally bake those things into your models because that's something that you know. And the aircraft manufacturer will not let you fly those aircraft for a century, or certainly not with a stamp of approval. So you have plenty of things that you do know, etc., etc. Same thing for the expiration dates of fresh food. You know tons of things. There is literally the physical dynamics of decay of food is like known. It's not a surprise. So is it going to be baked at the core of your model, or do you pretend that you want to statistically forecast that? You see, that's the thing. So we, when we operate with clients, we have those models where we just do a simple things. We just say, hold on. We are not going to directly jump to a time series model just because it is easy. We just take the time to say, what is it that you're trying to solve? What are the statements that represent, something that would make sense to be faithful to the future of your business? Are we making a statement that is truly capturing your essence of your business? And then we engineer a numerical recipe from that. You see, that's where it's very, very different. And so if we have an accuracy, and we do, because we want to assess the quality, but again, we are going to start from the essence of the business. We try to capture the structure, and then we will engineer something on top of it where it is the accuracy, but not the accuracy in the sense of the time series accuracy. It's of faithfulness or usefulness to the business. And that's a very, very different take.
Something that captures the peculiarities or eccentricities of that vertical.
Yeah, or not even the peculiarities, just its DNA, central. I mean, when I say for aviation, you have to take front and centers that what you're saving, spare parts, are airplanes. It's not like a peculiarity of aviation. It's the core. Aviation is all about aircraft and making sure that they fly all the time with perfect uptime and perfect security. This is not a peculiarity. This is the essence of aviation.
Yeah, but there are no trends in aviation in terms of parts, but there are in clothing, for example. There are certain fads and trends that come and go.
That's the thing, is that and in aviation, you do have something that is different. You have, fleets that comes and go. For example, the Boeing 747 is being phased out, and it will not be flying any passengers, a few years from now. It is almost over. So it is almost not flying any passengers anymore. So there has been like a phase out. It was not a grand surprise. So there are things that qualify as trends, but it's just, again, the structure that would be this fleet is being phased out. So Boeing 747 is phased out, but the Airbus 350 is phased in right now. So that's the structure. And indeed, in fashion, the structure of the problem is different. The novelty is not expressed in terms of fleets or whatever. It is expressed in patterns, colors, styles, materials. You can have a material that is trendy one year, such as leather, and less another year. So it's just different. And again, what I'm just saying is that if you want to do fashion, and you say, you know what, I just want to do fashion, but I'm just going to ignore novelty. I'm just going to ignore everything that makes fashion fashion. My answer to that is, well, that's not going to end well. You see, that's a very basic statement, and that's where I would say strongly disagree with the perspective that is expressed in most supply chain textbooks that those things are details. They are not. You cannot approach a vertical be entirely dismissive of what makes this vertical specific, of ignoring everything that is front and center, and say, job's done. No, not job's done. You know, you cannot do aviation while ignoring that you have aircraft. You can do fashion while ignoring that you have novelty. You cannot do fresh food while ignoring that you have expiration dates. Extra. We can multiply the example. You cannot do, you know, merchandising for a sports team with ignoring the fact that you have tournaments and that every year the structure of your problem is that you have one team that wins. That's very interesting. You know, you don't know which team is going to win,
but someone will win.
But you know that some. And by the way, we had one client that was doing merchandising for actually baseball accessories for U.S. baseball teams. And the interesting thing is that the problem has a very specific structure. You have like a series, and they have dates, and every year there are winners and losers. So you see, you do not know everything there is to know about the future, but you still know a lot. You know that there will be a winner, that there will be losers. You know, and that's very interesting. You know, that gives structure to your problem. And what I'm just saying is that the time series perspective, for example, let's go back to this company selling, let's say, accessories for baseball teams, T-shirt, caps, gloves. How do you fit the fact that there is always one winning team and one only into a time series? It's not a difficult statement. You know, it's not rocket science. I'm not, you know, making a particular, I would say, advanced statement or sophisticated statement about baseball. You know, it's like super basic. I don't think that, I mean, the audience might disagree about whether it's basic or not, but my proposition is that, yeah, it's kind of as basic as it can get if you're into sports, saying that there will be like winners and losers, but in the time series, if you look at time series, the classical pattern, you cannot even express an information as basic as that into your model. And so your accuracy that you engineer on top of it, is it really going to make sense? You know, that's my thing, is that you are engineering your accuracy, you're engineering something on top of a model, this time series model, that is not making sense. You know, and that's the thing, is that yes, you will get numbers, but...
Well, I am mindful that I do want to start wrapping up and look at some audience questions, because I did make a promise, a man of my word. But we are a company that is bottom line financially, driven by a purely financial perspective. And there's one simple criticism that may have already been asked, I don't know, but I'll pose to you now. There are multi-billion-dollar companies that completely disagree with pretty much everything you've just said. Multi-billion-dollar companies that have run for a century or more. How do you respond to them who say, look at our bank balance, Johannes, we disagree with you?
So, on several levels. First, companies do not agree or disagree on anything. Companies are soulless entities, you know, just large collections of humans. They don't have an opinion in themselves. Only people working for those companies do. So, companies do a lot of things. A lot of things, especially in large companies, is just accidental. You know, it wasn't really, you know, engineered that way. It just happened that way. So those are the accidents. So I would say, first, let's not put an intention to a lot of things that were done, you know, in ways that were semi-accidental and that were emergent. You know, so there was like no grand plan. It just happened that way. So first, you know, when we say that I disagree with time series, my experience is that when I discuss with executives in large companies, they are very frequently in agreement with those sort of fundamentals that I just mentioned. When I discuss with the CEO of a large fashion company, he's, on the contrary, usually exceedingly baffled by why the planning teams wants absolutely to fit everything in time series, which is a complete mismatch to his own vision. So usually, I see executives that literally struggle with their planning departments because it is very frustrating. It is a very frustrating, I would say, experience for them to even deal with these people. So first, am I really in disagreement? I do not think so. I mean, my experience when I deal with, especially, you know, the sort of executives that have spent decades in a vertical, usually they have a lot of frustration with the way planning is done because it just do not reflect their core perception and understanding of their own business. They don't necessarily have like a refined vision, like the problem is the time series paradigm and the accuracy, which is just wrong. They just say, we have planning, it is slow, it is frustrating, it gives numbers that nobody uses. And you know what? At the end of the day, I trust my gut feeling more than the numbers that comes from the planning team. So you see, that's the sort of raw sentiment. And very frequently, I would say, the company, the fact that those executives are saying that and that the company is successful proves that they're kind of doing right. They have a planning team because they can't, the problem with this sort of gut feeling that they are not scalable. So at some point, you can't just ask the CEO every time you need a number. So you need more numbers. So you need this planning team and you need those tools and whatnot. But they are not necessarily super good. And a lot of people, again, that's what those spreadsheets are about, is they revise openly or secretly, the numbers. And a lot of large companies have a lot of shadow IT where people just re-engineer the numbers independently from the official s&op plan and whatnot. So first, am I so far from the actual perception of executives who are working in different verticals? I'm not so sure. I diverge significantly from what is written in the textbooks, but I'm not sure that I'm diverging that much from the gut feeling of most executives that I had the chance to talk to. I rarely had, I don't think I ever had actually, any CEO who told me, Mr. Vermeulen, no, we believe here in this company that time series are an accurate depiction of our business. I don't think I've ever met any, CEO who told me that. I mean, most of the time they would give me, the DNA of that company, and I've never heard the word time series to describe the word of what makes their business ticks. It's just not even part of the glossary to do that. Now, if we move forward.
Sorry, John, I'm just going to have to press you because
yeah.
I have looked and there are actually a number of questions that I believe
so let's proceed.
You'll want to sink your teeth into.
Okay,
but what I will do before, in case there are more, can you give a terse summary of your position on why forecast accuracy is not important, and then we'll transition?
I would say, again, back why it's unimportant. It's because if I take the supply chain textbook definition, it is all wrong. I would say all the way to the bottom. It's just the paradigm. It's built on top of a faulty paradigm, which is the time series equispaced, point time series forecast paradigm, which is all wrong. Okay. So that's why I say it is a complete paradigmatic mismatch. So it mismatches the problem it attempts to solve. And thus, I would say, yeah, it's just a fancy mathematical or statistical solution to the wrong problem. So it doesn't matter. That's why I say it doesn't matter in this sense. However, if we say the Lokad way, which is do we have something that is qualifies quantitatively whether a quantitative statement about the future is faithful to the essence of the company, then it does matter greatly. But you see, so my answer is textbook definition of accuracy doesn't matter, irrelevant. If you go the Lokad way of thinking faithfulness of your statement about the future, then it matters greatly. Very different positions.
That was admirably terse. Thank you.
For me.
No, it was good. Thank you. So that might actually touch on some of the points that people have posed. Thank you all for your questions. I'm not sure. We will do our best to answer them in order. They were submitted behind the scenes. So I am reading what was presented to me. And some of these are statements that you will, I guess, respond to. So from a chap named Dustin. Dustin writes, and I won't project any intonation on these statements. You're an idiot. No, he didn't say that. Forecast accuracy is important. However, the current method of quantifying it by measuring the accuracy of a point forecast is limiting. The ultimate goal should be to measure the accuracy of a distribution of probabilities. Do you agree?
I would say, again, Lokad, we move through the probabilistic forecast in the right direction. The probabilistic forecast lets you, it's one point that I did not address, which is also in the classical paradigm, the classical supply chain paradigm is entirely dismissive of uncertainty. Mm-hmm. But still, it is not enough. That's why I say, yes, embracing uncertainty is certainly necessary. Lokad, I'm all for it. But again, go back to if you're still one-dimensional, it's still not good. And if you still treat the past as a symmetric of the future, caveat for the uncertainty, you're still dismissing entirely this potential of decisions that have not made yet. So we see, and that's not the end of the story. We have other things that have not touched that still need to be baked. So you see, that's, yes, obviously I'm a big proponent of going probabilistic. But again, I'm saying that alone, it's not sufficient. Time series is still a problem. Asymmetry between the past and future is still a problem. And there is another chapter I've not discussed, is probably instrumentality of your forecast. And that's another big can of worm.
Okay. Well, thank you. I hope that helped, Dustin. Next question from Paolo. Paolo is a good writer. He's provided additional context, so I'll go question then context. Are you suggesting that forecast accuracy is more about the accuracy of execution, which encompasses insights from both internal and external changes? Additional context. From a forecast perspective, should the focus be on quantity and value? Paolo believes that KPIs have the most significance when shared across different functions, especially commercial, marketing, and finance. In your view, are upside and downside scenarios useful? A lot of little questions there. I'll let you choose.
So first, and that's something that is very interesting. First, forecast is an ingredient. That's an artifact. In itself, it doesn't do anything for a company. That's something. So if you produce a quantitative statement about the future. Again, I want to separate, the Lokad way of thinking with the textbook, supply chain textbook way of thinking. The supply chain textbooks is time series forecast. Lokad is quantitative statement about the future, open-ended in what does it look like. So if you produce that either way, both ways, Lokad way or mainstream way, the software is just an artifact. It has no value in itself. And thus, I think here, Paolo is very right that whatever your assessment cannot be something that is intrinsic to the forecast. It is only through the execution of the supply chain that you can assess whether this instrument, this numerical artifact, was suitable or not. So you see, this is a very indirect thing, is that you produce your numerical artifact, your forecast, and then ultimately you can only judge whether it was a good or bad forecast by its consequences, its far-reaching consequences. And that's where, so you need to walk back from the far-reaching consequences up to the numerical recipe used to produce a forecast to assess whether it was good or bad. So that's a very, I would say, consequential approach that I have to the forecast. So in this area, yes. But then what about the KPIs in sharing to the different departments? I would say careful. Why? Because companies do not make money by having people reading numbers. Having numbers shared across teams is well and good, but does it create value for the company? Not really. And when people say KPI, usually it's supposed to be key, like key performance indicators, supposedly a few. But my observation is that companies have dozens, hundreds, sometimes thousands of KPIs. So it's not key PIs. It's like PIs, performance indicators, and it's like truckload. That would be TPIs, truckload of performance indicators. So my take is, yes, I'm not saying that you should not look at your data, but beware. There is, at the core of the supply chain, you have this bureaucratic core of supply chain. I've already touched about that in some previous blog post, I believe. And so whenever you share numbers, beware, the company will have to pay people to read those numbers unless those numbers turn out to be immediately actionable. It's not clear that it's going to be a net win for the company. It's very easy to pay people to watch numbers, but make profits, after that, that's an open question. So my point is, yes, to some extent, but beware. Companies are already paying way too many people to spend time watching, steering at walls of metrics while doing very little afterward.
I might just quickly follow up on that because, correct me if I'm wrong, you're saying that too much interdepartmental communication can be bad, but isn't the opposite of that silos, which I know you're not particularly a fan of?
So the thing is, again, what are people going to do with those numbers? See, my take is that if you want to share data, should it travel through the eyes and the brains of humans? We are talking, if we take, people lose sight of the scale of the thing. a typical client for us has more than a terabyte of transactional data. That's 1,000 gigabytes. That's a lot. So there is a lot of data. So realistically, if we say that, through your eyes, how many digits can you read per second? Something like 5 digits per second? I mean, it would take entire lifetime to channel this data through human brains. So obviously the data, when we say we want to share data, we don't mean that it has to go through people. Silos is not, breaking the silos is not necessarily of making sure that Bob from the other department has to consume all the data that you produce and generate and reports and whatnot. It's just about making sure that everybody has programmatically access to all the data there is in the company so that they can optimize their own decisions. And if they have to coordinate, it is about aligning the numerical recipes themselves that takes the various decisions. It doesn't mean that people themselves have to, use their own time and bandwidth, human time and human bandwidth, to manually process this data. So you see, that's where I say breaking the silos is not about generating work for the other department by creating a report that you expect the people from the other department to read. Here, you're just creating bureaucracy. You just create a bureaucratic task that you force on another department. And that's, again, my intuition is that most of the time when you do that, it's not going to end into something profitable for the company. It might, but it's not a given, and most of the time it won't.
All right. Well, thank you. That was my question. I'm mindful. Oh, we have time. So this question from, forgive me if the pronunciation is incorrect, Sachin, excuse me. Johannes, how applicable is the basket concept or the basket perspective for B2B businesses as opposed to just, and not just consumer goods?
It's essential. Let's take an example. One of our clients at Lokad is a B2B distributor of electrical equipment. It's a very, very large company. Not going to give the name, but it's a very, very large company. And when you sell electrical equipments, who are your clients? Big businesses. And the bulk of your business is driven by construction sites. So yes, there is the occasionally, a company is going to order a light bulb or a light or a switch, just to do a small repair. But the bulk of the business is driven by construction sites. There is a new tower, and 6 months from now, you need 4,000 light switches, all the same model, at the same time. And you need 200 kilometers of cable, literally. And you need et cetera, et cetera. And so we have, and that's not, an edge case. This is a very classical thing. See, when you look at civil construction, there is a building that is constructed. There will be, at some point, there will be businesses that pass big orders to say all they need to equip, in terms of electrical equipment, the building. And so, let's say 6 months ahead of time, they will not expect this distributor of electrical equipment to have everything on stock. Nobody has like this amount of stock readily available. So the company doing the installation of, let's say, the building knows that. So month ahead, they will pass a big order, and they know that it's not going to be available. So they pass it, month in advance, but they say, we give you a lot of time, but at this date, next year, end of March, we want to have everything ready, because then we will proceed with the deployment in the building, and we need every single thing. So we have like a big order, 1,000 references. For every reference, there is like hundreds of units, and we need every single thing down to the last unit, perfectly available at this date. And we don't trick you, we give you plenty of months to make this happen. And this is what, so you see, in this case, the interesting thing is that we deviate again from the time series, is that we have demand. But if you think about as the demand as time series, you're missing the point. The point is you have two dates. You have the order date, and you have the intended availability date for the merchandise. So this is a basket as well. This is B2B, and it comes with an extra complexity compared to the supermarket, that whatever you need is announced ahead of time. Now, is it perfectly known? It is not, because what happens is that there might be small deviation in the construction sites, and then the client may come back to you and say, we need those things 1 week earlier or 1 week later. So you see, there is still some variability, and then as construction site progress, they might make marginal adjustments to their basket. But you still have, like, you know, the bulk of the information is available a lot of time. So you see, again, even if we're looking at B2B, we have those sort of phenomena. Even more so, I would say B2B is all about repeat business, about well-identified partners. So this sort of basket analysis is even more prevalent in B2B than it is in B2C retail.
I want to follow up, but I don't want to be unfair to people who've asked questions, so I will just push on. From Stefan, or Stéphane, the French, I believe Stefan. One can potentially feed, it's a comment, one can potentially feed a vast amount of data, structured or not, to an advanced AI to get a forecast. However, there is a catch to this, isn't there? I'm not sure if that's a question, maybe you know.
Yeah, I mean, so people think that the alternative to a time series is some sort of Skynet AI thing. My answer is, why do you think that? Again, when I say, if all you've ever seen in your life is round shapes, you've never seen a square shape, you might think that the alternative to round shape is an incredibly complicated shape. That's not what I'm saying. I'm not saying that the alternative to round shape is something that is impossibly complicated. It might be just a square shape. Again, I'm not saying, you know, I'm not saying that the alternative to time series is a Skynet level AI or whatever. No, most of the models that Lokad does are very simple. They are just not time series. You know, again, there is this sort of cult that it has to be time series. I say, why not? The mathematics are vast. You know, there are tons of alternative things that you can do that are not substantially more complicated than time series. They are different. There are maybe I mean, time series being the simplest of the simplest. Yes, they are a little bit more complicated, a little bit, because there is almost nothing that is simpler than time series. Time series is literally one quantity with a time dimension. So it's hard to do, because we will have to deal with the time dimension. It's hard to be simpler than time series, because time series is already like super simplistic. So, but it doesn't mean you should not, your takeaway should not be that the alternative to time series is Skynet level AI. No, those models are still parametric, very simple. And again, it's just about embracing the structure of the problem that you're trying to solve. And when I described the structure of the problems, that was problems like series of baseball, one winner every year, the other teams lose. You know, again, we are not talking of impossibly complicated structure. Those things are not that complicated. They can be described in minutes, and the models that Lokad typically use can also be described in minutes. Time series can be described in seconds. So we are more into the sort of stuff that need minutes to be described.
Well, in terms of the difference between the shapes, again, and I will briefly follow up on this, and again, terse response if possible. When people talk about measuring how, I know language is tricky here, so how good or faithful a forecast was, they look at accuracy. We don't look at that. So the other shape that we use is financial impact. Is that the alternative shape?
So that's part of our bag of trick. You know, the financial perspective, it's not like Lokad, we are adamant about financial perspective. It is just that in my experience, when we are dealing with a large company and who has an equivalently vast supply chain to manage, we have a problem of reconciliation of dozens of conflicting goals. You know, you have so many goals. You're a large company, you want not to waste, you want high quality of service, you want maximum utilization of your warehouse and your asset. You have constraints such as maximal storage space, you have shelf life, you have you have constraints and goals and all over the place, you know, all over the place. So we need a language to unify all of that. You know, it's a very practical things, which those things, they kind of conflict against each other. You know, quality of service conflict against waste. If you say, I want to have like super high service level, then again, if we go for perishable, you have very high service level. That means that sometimes you will have inventory that expire that you have to throw away. So you create waste. there is tension. You cannot say I have zero waste and very high quality of service. If you have high quality of service, you will have some waste. And if you entirely eliminate the waste, it means that you very frequently end up with stockouts. This is inevitable. This is just the design of the program itself. You have those conflicting goals. So now just let's magnify that. We have a large company. We need to unify all those things. And my proposition, that has been like the bag of trick that Lokad have used, is that if we put all of that expressed in dollars, we have the lingua franca. We have the way to just unify. So it's just a bag of trick. It's not that I want to be, to think in terms of dollars. It's just my experience. It's the only thing that scale enough when considering complex companies. That's just a matter of practicality at scale.
Well, thank you. So again, and it's 4:15, so tries for a bit of terseness here. Should this video, it's Dustin again, should this video be titled, Does Time Series Matter? You believe quantifying uncertainty and forecast accuracy is vital, but disagree with the current methods.
So
correct.
The thing is, again, accuracy and time series are, they are the same thing. If you look at supply chain textbooks, I've never seen, show me, please, the audience, any supply chain textbook in which the accuracy is not immediately associated with a time series. It's usually, most supply chain textbooks would not even bother giving the mathematical definition of a time series. They would not even bother. They would directly jump to the accuracy definition, which in itself defines the time series. So you see, those things they're in the mainstream supply chain paradigm, they are co-substantial. They're one and the same thing. And look at what I'm saying is that I want to tear them apart. And indeed, there is a way to make it matter, to make accuracy matter. But it is something that is so radically different from what is actually presented in those supply chain textbooks that I'm very, I would say, hesitant. I'm on the fence of calling it accuracy. Accuracy is a good term. It is valid. And that's, by the way, what we do morally. But what we're doing is such a radical departure from what is actually found in the supply chain textbook that, you see, it just creates confusion when we use the same term.
Thank you. I believe, well, I'll ask the question, but we did touch on this in the last two questions. So this is from Constantine. Some advocate for FVA, your favorite, as a means to determine if efforts to improve accuracy are worthwhile. You recently released a review criticizing FVA. What do you suggest as an alternative? So again, what shapes? What are you? But again, it is a key point for the record.
So here, I will give an answer. It's not from me. It's actually from Thomas Sowell. Is when a surgeon removes a cancer in your body, what do you replace the cancer with? So with FVA, my take is that the accuracy done with the mainstream paradigm is a bogus idea. It do not stand scrutiny when you want to look at the essence of the business and is this mathematical instrument aligned, making sense at a high level with my business. And my proposition is that when you look with a modicum of attention, it does not. So now, FVA, you're just over-engineering a process on top of a bogus paradigm, of a bogus tool. So you're just making it worse. So in itself, FVA, it's just moving the company further away in the wrong direction. So you had like a bogus concept, those time series / accuracy, and now you want to engineer a process on top of it to create some kind of mini bureaucracy in the company. So my take is that it's not the first, nor it won't be the first, it is not the first and it won't be the last useless bureaucracy that gets introduced in the company. Large companies have like dozens of mini useless bureaucracies floating around. So in the end, it's not endgame for the company by just having one more useless bureaucracy floating around. But will it make the company and its supply chain more competitive? No, not even close. It will do the exact opposite. Although it's not going to break the company either. It's the sort of things that just are mostly useless. So it will just add some cost, and the company will move on.
Okay, I will just push back a little bit on that because we both like Thomas Sowell, you know that. And that analogy, you know, when a surgeon removes a cancer, what does he put in its place? Okay, I like that phrase, but if you were to apply that to this context, it's almost like saying, well, we've removed this layer, sit on your hands, don't put anything in its place. What will fill that vacuum?
But the reality is, so let me describe, you know, what accuracy actually means in a large company. There is this S&op process with a bureaucracies that produce forecasts, and then people assess those forecasts. Are they used? No, they're not. The company, all the large companies have been, you know, for the last decade, have been in touch of, again, over 200 large companies. When I inspect, and I had the chance to do audit missions for dozens of them, when I audit, I realized that the entire company runs on shadow IT spreadsheets. So all those numbers that floats from the S&op process, etc., they are not used. The sales people do not use those numbers. And manufacturing do not use those numbers. Supply chain people, with logistics, you know, transport capacity warehouses, they don't use those numbers either. So it's like it's a Potemkin village. There is this illusion of rationality where people produce, you know, they do this grand thing with S&op and they revisit the thing once per quarter. But then every single manager have their own secret spreadsheet on the side that they use. And this is what drives the business. And that's literally very much like a Potemkin village. You know, it's just mirrors and facade. There is nothing. And the interesting thing is that every single manager thinks they are the only one to have this hidden spreadsheet. And where it gets funny, actually, one anecdote is where it gets funny is that I had multiple times interviewed like a VP of supply chain, and he told me, don't tell anyone. I have my secret spreadsheet that I use to do that because those numbers that I get are complete garbage. But for my subordinates, I demand that they stick to the official S&op process, just me. And then, as part of the audit, I just interview the subordinates, and the subordinates and one of the subordinates told me, I have a secret spreadsheet. Don't tell my boss, because I'm the only one to not follow the S&op, but it works much better. So I don't trust the numbers, so I just do it differently. But you see, and don't tell my boss, and don't tell my colleague, because I'm the only one to have this secret spreadsheet. And the funny thing was they all had their secret spreadsheet, because I had uncovered that because the numbers that the decisions didn't match the S&op plans. They were better than the S&op plans. So literally, the S&op plans, the numbers were bogus, and that's the situation that I've seen over and over. You have bogus numbers in the S&op plan, and yet the final decisions comes out right. How is it possible? And the answer is invariably, there is a spreadsheet somewhere that is crafted in a way that is a lot more aligned with the essence of the business. So it's very crude in a way, but it is much more meaningful in another way. And that's what actually is used to drive the business. And I've seen that over and over and over. And usually people are just, you know, they're just hiding the spreadsheet because it's not like the official politics. But nevertheless, it is what makes the company ticks, not the grand Potemkin village of those grand numbers that are, you know, at every stages, people just cheat with regard to those numbers.
All right, thank you. We do still have a few questions to get through, so I'm going to have to beseech terseness going forward.
That's, yeah.
Okay, so this is from Sean, potentially a Sean Schubert. I don't know. I don't have surnames here. So Sean writes, forecast accuracy is one element in the supply chain. It may not be the key constraint in a particular business. Capitalizing on an improved forecast usually requires other changes in the supply chain. Do you agree?
Again, does capitalizing on an improved fax machine matter? You see, that's the thing. You see, I'm trying to convey with the audience.
You heard it here.
You know, people tell me we have a better accuracy in the classical sense. It's just, for me, it's just the same thing that telling me that you have a better fax machine. I say, well, it's certainly an improvement compared to the old fax machines, but in the grand scheme of things, it is irrelevant. This tool is not adequate. There are better ways to do it. So you see, that's the problem, is that it's not because it's an improvement compared to the status quo that it's an improvement overall. I posted years ago the bane of incrementalism in supply chain. People only see improvement through the lens of, yes, it is incrementally better compared to what we have. I say it can be, this is a curse. It can be a distraction. If you can only think about better fax machines, you're not in a good position, you know. And when people say, oh, you're talking about AI, Skynet. No. I say, for example, email is fundamentally simpler than a fax machine. A fax machine has a scanner inside it. It has a printer inside it. So in terms of technology, a fax machine is actually more sophisticated than email. Email is simpler on all fronts. You know, it doesn't have a scanner. It doesn't have a printer. It has a network connection just like the fax machine. The fax machine has a computer inside it, just like your computer. So the fax machine is just on all fronts. It's more complicated, more sophisticated, more demanding in terms of technology, and yet it is a crappier solution compared to alternative. And that's my point, is that when people say, oh, we have this improvement, I say, yeah, you just have a better fax machine. Congratulations. But you see, you're missing the point. You're missing the opportunity to just do something that is simpler, better, more aligned, faster, leaner. On all fronts, you will be winner. It's not going to be a time series. And it's not going to be your classical accuracy.
Well, thank you. Moving on, from Philippe, when discussing structure in forecasting, can a time series forecast be a component of that structure?
To some extent, when applicable, it can be. Again, time series is just such a fundamental structure. You know, it's just you project a measurement into the future, one dimension. So it is very difficult when you craft something to not have like time series that just emerge accidentally, even as component of your predictive ingredient. So, you know, I'm not opposed to that. It's a very basic data structure. It would be like in computer science, say, I'm against sorted list, or I'm against using dictionaries. You know, it's a very basic primitive. And my message is not, again, that time series should not be used. This is not the essence. I'm just saying that if all you have is time series, it is like it's very, very, very simplistic. You know, you need to expand your vocabulary. You need to expand your horizon. There are other things. In those other things, yes, you can have time series. It does happen occasionally. Example of that would be there are, I would say, semi-accurate, you know, prediction for the evolution of, for example, the number of aircraft that flies in the sky is known years in advance because it's literally the roadmap of production of Embraer, Airbus, and Boeing. So if you want to help companies doing aviation, you literally can project how many aircraft there will be in the US airspace or European airspace years ahead, because it's literally planned years ahead. So, and this can literally be represented in terms of number of aircraft. So yes, you can have time series that emerge and that are useful. It's not, you know, I'm not opposed to that. I'm just saying that time series are not the end game. They can be an ingredient. It's fine.
Well, thank you. Pushing on from Manuel. Universities continue to teach traditional forecasting methods and emphasize their accuracy. With the recent introduction of machine learning models that consider many additional factors, has this changed the viewpoint presented today?
So if we have to go back to televisions, machine learning is the difference between having like a black and white television, which would be cathodical screen, so you know a light that projects things. So that would be the big fat screen. That would be the old school time series. And machine learning just gives you the black and white LCD screen. So it's still black and white. One has better qualities, you know, it's leaner, it has, but the problem, my beef with universities is not, you know, this is a technicality. It's about the better numerical model. Machine learning has its place, but what I'm saying is that my problem is not that universities don't teach the right forecasting algorithm, is that they don't try to teach the right forecasting attitude. You see, that's my beef is the attitude. Are you looking at the essence of the problem? Are you trying to produce a statement, quantified, that makes sense for the business? Is it what you're doing? Does it make sense? Do you see, that's the attitude. And then, do you take into account the fact that the past is not symmetric? The future is not the symmetric of the past. Again, attitude. And then, we have the technicalities. And again, for me, classical time series and machine learning, there is a whole spectrum. There is a whole spectrum because, by the way, if we look at the Walmart competition, that Lokad we earned 5th place. And the trick was we used a super simplistic parametric model with 5 parameters. So does it count as classic? And literally, we ranked out of 1,000 competing teams. We ranked number 5, and we even ranked number 1
at the SKU level.
At the SKU level above everyone with a super simplistic model. But the interesting thing is that it's a super simplistic, like 5 parameters model. So in a sense, it is an old school model. But the way we learned those parameters was through with things that were more elaborate, differentiable programming. So you see, how do you say, if you have a model that in structure is super simple, so it qualifies for an old school model, but the way you learn the parameters is fairly modern. Is it machine learning? Is it old school? You know, so for me, there is a whole continuum from super classical, autoregressive models to super fancy deep learning models. There is a continuum. There is no, there is no quantum leap. All of that is there. And my beef is not that universities do not teach correctly those forecasting algorithms. That's okay. It's that they do not teach correctly the forecasting attitude, the mindset that you need to have when dealing with the future for supply chain purposes. That's the problem.
Boom. Well, thank you. Next, from Nicholas, potentially a friend of the channel, I'm not sure. Isn't the goal of the s&op process to transition everyone from using secret spreadsheets to utilizing the company's primary system? And are there challenges to achieving this?
So first, the old school goals of s&op is to create company-wide alignment. So that would be the goal. So that basically people on the production front produce what is going to be sold by the sales team, and that salespeople produce what you can fulfill and whatnot. So it's literally about corporate alignment, so that you have this, again, you have a large company, so it's many moving parts, and s&op at a very high level. It's about creating alignment, so you have the machine that the company that moves at once, synchronized, coordinated, so that it can generate its own demand. Again, supply comes first, and then execute that. So that's the goal at high level. But again, that's the ambition. What does it look like in practice? In practice, s&op practices are endless series of meetings. That's what it is. Again, I've audited dozens of companies. I've seen many supply s&op practices. In practice, so you have the ambition, and then you have to look at what it is in practice. In practice, it is an endless series of meetings that are super unproductive. So now the thing is, and my take is that, again, that's a paradigmatic vision, is that how is the information supposed to flow around? The old school paradigm, it's flow through people. That's s&op. S&op is about the information flow through people, hence the meeting. My take is that information flow through the IT systems, the applicative landscape. So you see, we have like competing paradigms. We are not even on the same page. I say the information flow, and if there is coordination, it's not going to be coordination about the information. The information flow through the applicative landscape. You don't need to have people that talk to each other. If you have to create alignment, it's going to be about the numerical recipes and clarifying the strategic intent of the company, which is absolutely not what is done in s&op meetings. None of those that I've seen.
Well, thank you. Push on to, 3 left. And again,
that's okay.
Let's
proceed.
So, forgive me if I'm mispronouncing this. Call Vroomfondel, wonderful name. What percentage of companies using the incorrect time series? Sorry, forgive me. Let me start again. What percentage of companies using the incorrect time series approach still achieve satisfactory or good results, or meet their targets?
That's the interesting thing, is that a lot of large companies have decent results, but again, those time series forecasts are just part of the bureaucracies that do not contribute at all to anything. So you could remove it, and it would work just fine. And by the way, this is not an hypothesis of mine. It was literally tested. We did a grand experiment. We had clients in the US, in Europe, and during the lockdowns, the lockdowns of 2020 and 2021. The interesting thing is that some companies in some countries, they had some parts of their white-collar workforces that were just, put in under technical unemployment for 14 months. So the company we had quite a few clients that were still operating at like 80% capacity, so it was reduced, but it was non-zero. It was like 80% of regular business. But due to those lockdowns, all the entire white-collar workforces, especially from the support function like planning, were literally, put stay at home with a policy of not ever touching their computers, their corporate computers. Why? Because the company was, in many countries in Europe, but also in some areas in the US, they had subsidies if people were truly put under technical unemployment. So they were not working from home. And a lot of our clients took those options. So literally, employees had to be at home and not work. And then the government would pay for them. And the interesting thing is this lasted for 14 months. And those companies just operated just fine for 14 months. So we had like grand experiments where the entire planning department is like gone, entirely gone for 14 months. And everything is fine. And so you see, my point is that if a company can operate without a division for 14 months, with all of the people of this division absent, what does it say about the division? Probably that it's not exactly super mission critical. And we even had companies that literally launch new project, new venture, and even move forward quite steadily. We even had a case, just to give you an example. We even had a case, and that was again large company who manufacturer who essentially became, during the lockdown period, they became an e-commerce. That was a little bit of an accident. The e-commerce segment was like 5% of their business before the lockdowns. At the end of the year 2021, e-commerce was 2/3 of their sales. So before it was like 5%. At the end of 2021, it was 2/3. So the company underwent a massive transformation, going from 5% e-commerce to they are now de facto an e-commerce company. They manufacture their own stuff, but they are an e-commerce company. And they undergone this transformation with all their white collars that were from planning that were gone in this situation that I described earlier. So at home, not working, paid by the state under subsidies. So question is that if your company can undergo massive, rapid transformation, execute them well, with all those functions absent, what does it say about those functions? Again, I'm challenging that. I'm challenging the thing, because I'm not saying that accuracy do not matter, again, in the classical sense that Lokad has, in the very specific sense that Lokad has. Mm-hmm. But if we look at, it is usually practice. I observed over and over, and we had with lockdowns, we even had the grand experiment, which is just shut down the division in charge of those accuracy metric for over a year, 14 months. This is long. And what is the impact for the business? Nothing, just as usual. And some of those businesses even thrived after that. So that was, for me, that was an eye-opener. This is the experiment that should not have happened, but did.
Well, thank you. And last question, also from Nicholas, possibly a different one, I don't know. I often find departments trying to override statistical data with gut feelings. How do you define the impact of forecast How do you in real time? How do you define the impact of forecast accuracy on improving inventory and customer experience?
That the thing is that, you see, this is a question that is never asked as part of the, I would say, mainstream time series accuracy paradigm. It's not a question that is being asked. In supply chain textbooks, this is not a question that is being asked. So this is absent. And, but this is not the only concern. That there is a whole area that we did not touch, which is the instrumentality of the forecasts. How well are they to be actually used in the company? And those things are absent. So yes, this is very important. And connecting all the dots from decision to the mathematical model that produces those statements is very important, but that means that you need a numerical recipe that goes end-to-end from the predictive generation of those quantitative statements about the future till the decision that you take and that have real-world consequences with financial impacts on your company. And you have to do all the journey backward to connect, and that's how you will assess whether your model, your predictive model, is faithful or not. I'm using faithful because I don't want to use the word accurate, but
yeah, I know.
And part of the bag of tricks is this financial perspective, because it facilitates doing that. But you see, my conclusion is that the way it is usually practiced, it stops halfway. And that there is this grand illusion that is entertained by supply chain textbooks and most supply chain software as well, is that you can cut the problem at the forecasting stage and say, in isolation, we are going to assess how good we are or how bad we are in isolation with the rest. And this is complete nonsense. There is no such thing as assessing in isolation the adequacy or the accuracy of a forecast. This is nonsense. It is only valid for, I would say, casual purposes. If you do a forecasting competition, it is good. But you see, a forecasting competition is literally an exercise in futility in a way. It's just an exercise of the mind. You know, it's not something that is real and applicable. This is just about benchmarking mathematical models. You know, it's good, but it's not real life. It's just like if you want to have the winner of the shooting range. You know, there is this. You have sports where you do shooting. This is not. You may have like an Olympic champion of shooting. But if it comes to, let's say, an actual military exercise, people do not shoot with actual, guns in an actual war the way people shoot in a controlled environment. This is completely different. And the lessons that you can learn from, let's say, the Olympic Games about shooting is absolutely not something that you can transpose to a battlefield. So again, there are similarities. I'm not saying that. Holding the rifle right and whatnot, it's not like similarities are absent. It's just that beware, it is very different things, and things cannot just translate directly. And that will be, maybe the concluding thought is that part of the accuracy problem is that the problem itself is framed incorrectly. You see, it's not that accuracy is false in the mathematical sense. That's not what I'm saying. I'm not saying that, for example, forecast value added is incorrect in a statistical or mathematical sense. This is not what I'm saying. I'm saying that the paradigmatic, sorry, it's very weird, but the environment, the intellectual environment that just surrounds those concepts is inadequate. And you may not even see it, but this is the problem. It's entirely inadequate. And if you adopt those tools, again, those classical accuracy metrics, you're just making the problem worse. You start with something that was crude, and crudeness is okay. And now you introduce sophistication, but the wrong kind of sophistication. A sophistication that is deeply misaligned with your business. And if you have to choose between gut feeling, but gut feeling that truly embrace the business versus super sophisticated but just completely mismatch the business, again, approximately correct trumps, exactly wrong every single day. That's the thing. And accuracy is exemplified the traditional way, this exactly wrong mindset.
Well, to be honest, I don't have any other questions. I mean, I do, but I'll save them for another day. Thank you very much for your time. And for any of you who have stayed with us this long, thank you very much for your time. We'll see you next time.